Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, November 9th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here, inside day right now, and an inside day finished yesterday as well. So double inside day at the moment, developing. Very narrow 3-day range, just 48% of average, 17.5 points. That's very narrow right now. And to be at 48% of ADR at just 17 points shows you how quiet this melt up phase has been in terms of daily range. But no doubt it has been a very intense trend, never really testing even a previous session's low except for one day here. Everything else has been higher lows day over day. But we're now at highs, very narrow 3-day range developing. And again, we still haven't even hit the 8-period PIMA. We have taken the FOMC key level from November 3rd bid. So if we were to pull back, again, it may provide an opportunity to buy it for a continuation up. Any return into, say, 4,600 could offer that opportunity back up. But right now, again, we have rarely seen a push below a previous session's low since the breakout and the crossover on August 14th. Only one day has done it since then. Every other day higher lows and continuation. So at some point we may not even get a move all the way to the 8-period. Perhaps it just breaks down through 3-day lows. From there you may see it become an outside day up. Stop run day may be in play. But we're getting close. We're getting closer. Right now we do still have Fed Chair Powell on deck. Speaking 8 a.m. Central Time this morning. Also spoke yesterday morning. So again, heavy with Fed speak today. There could be directional conviction at some point thereafter. But overall, uptrending market. If we do see some pullback or a failed new low here at some point, that might provide an opportunity to buy it cheaper for a continuation higher toward that 48.05 upside target. That's the 100% target of this key range. All right, taking a look now at the NQ. 3-day narrow range here as well. Right now, trading 90.5 points of range. Heading into the RTH Open, that's 48% of average. If I were to increase this to 3 days and calculate the current developing 3-day range, you'll see right here the current developing 3-day range is 49% of average, 192.5 points. Compression right there, compression from this. It's inside day here today. The last time we had a narrow 3-day or 4-day range was here, and you can see the breakout and how it continued higher. Before that, there was a narrow 3-day range here. It broke down first, higher low, and then continued higher. So we've seen these compress time and time again and see expansion one way or another. 3-day range here, upside break. We will see which way we go this time. Again, everything continues to flow higher until proven otherwise. If we were to return even as deep as 16K or that lower FOMC key level or the previous month's high and close even, right? Even if we were to drop into that zone, it could still be a buy for a continuation higher. Not expecting that deep of a pullback though, because we haven't really seen that in this uptrending move. But that 3-day range continues to develop. It could become a 4-day narrow range, a 5-day narrow range, and the first day that it peaks or drops below those lows there and provides us a decent strong low could be the day that allows for the buy the dip and a continuation higher on a swing basis to the upside. All right, let's take a look at crude oil. Right now, crude oil trading barely higher right now. Another failed high attempting to develop today. It attempted to develop yesterday, but by the end of the day closed above that high. And right now you can see an initial rejection of the previous session's high, a strong move through it, and then a strong rejection back below it, and then a series of lower highs that have developed after that rejection. So it's you know, it has rejected that previous high pretty well. It is sitting on the previous session's midpoint. That's going to be an important level to continue to watch. A failure to hold that level could open up more weakness here. Clearly lower highs in play, lower lows in play down here as well. The one thing here that could suggest a major rip is the fact that this sell signal right here, which was on a significant day, look at the range on that day, huge. This is your midpoint on that day, and price closed above it and then pushed higher above it, and is now again higher highs, higher lows, and holding above it. That would suggest 9 times out of 10 you take out that high. So right now, the fact that we're above that level, that midpoint, which is 80, 82, 80, 80, right in that zone, that level's important. And even if price can pull back and hold that level, it perhaps suggests an upside continuation ahead. Maybe this is a flagging pattern here before it makes its upside break and continuation. So right now, that is very important here. And again, an upside bias just against the short-term range here and against that midpoint, and it's to the upside. All right, let's take a look here at gold futures. Gold here actually seen a bit of strength, and if you had to judge it just based on what we're seeing right now and nothing back before, this is an impressive move that we're seeing right now. It's an impressive breakout move. You can see right here, that's your compression, that triangle type of compression pattern. It got the initial downside break or push, the first wave down hard. It bounced off the previous quarter's close there and then ripped to the upside to break higher. That's pretty strong. You know, if you just take it from that perspective, this can tend to lead to more strength ahead and continue this expansion phase. So a compression phase for a very long time. At some point, you would expect a breakout, right? And so you can see right here the bands are pinching inward, the PivotBoss bands on the yearly setting there. Yearly VWAP is flat, and we're starting to see some strength. Here's where you know, again, I'm a little more skeptical to the upside break, is that all we've seen since August 2020 has been every rally has been sold and sold hard. Even this really good rally that started with that higher low, started with this one here and continued onward, that one eventually got hit with weakness. All of these moves here hit with weakness, and here we are again right back at resistance. Are we just going to fall right back down? So again, until proven otherwise, 1835 to 1840 is resistance. You can see 1840 right there. You can see 1835 in that zone. So we're coming into it. Today's high is 32. Are we at some point going to see one of these days a failed new high, or big rejection here, or push down after, you know, this kind of doji day? That's kind of what's developing right now. So, you know, if we get a rejection here, we likely come right back to 1760. If we can push through 1840 and hold and get a transition day, there's a shot to work higher toward 1900 and beyond. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.